What is up, everybody? Logan here again, coming at you guys with another 0 DTE SPX video. And we were successful in our last two trades since the last video. We're going to take a deep dive into those today, specifically today's trade, as it got like a little eerie feeling. This market's been pushing, and then the last couple of days have been pretty choppy to downward momentum, even with a couple gaps up overnight. But overall, still a really interesting market, and the gaps have been filling too. So I'm excited to get into this one. We'll go step by step through the trades. And first off, I do want to say, here's the Google sheet that I keep track of all the trades. So if you're somebody who's ever wanted to look at the rest of them, here they are, and I can scroll us all the way back as far as you guys would like to see. Vance and I are going to make a decked out one that I can show you guys. So that'll be really cool. And then I do want to thank you guys for all the YouTube support. We're at 11111 channel subscribers, which is really cool to see. I just like repeating numbers, but I do appreciate all the support as always. For today's comment below, if you guys want to leave a like, comment, and subscribe if you haven't already. Let's do the baby emoji. So my sister and her fiance are actually at the hospital right now, and I will be an uncle after tonight. So I think we should get the baby emoji going down below. I probably won't go to the hospital tonight though, but I'll try to see the baby tomorrow. But yeah, super exciting, and let's get into this video. So with the trades, looking at this sheet as always, right? Checked out the previous close, 39.91, and we had that big gap up on Tuesday, right? That's what was really crazy. So if we go back to Tuesday, we had a close at 39.57, but we actually opened up like at the 2x of the EM high. We were at like 40.30, 40.35. And we slapped some call credits on, and those were like an effortless setup. Nice little layup trade. As you can see, if we go down to the 0 DT pumping irons, yeah, we put the 40.80, 40.85s on, and that would basically have to test 3x the expected move high. I don't think we've done that except for CPI day. It was the only time last week. And like I said, those are elevated volatility days. So like personally, I sit out those days. This just seemed like a free layup, and the market was 80, 90 points away by close. So that was a trade we took off for 5 cents after slapping that on at 9.37 yesterday. Just a nice gap up layup trade. And then same with today's PCS. Slapped that on at 9.53, right when we were around that 67, 70 range, right? Like that 39.67. To get these fills around 35. Some people got 40 credit, others waited too long, got 30 credit, and then we end up taking it off for a 10-cent debit because the market was a little eerie today, especially if we take a look, right? Like we got the fill right here at the support zone. We chopped, headed a little bit lower, but we still have respected the expected move for most of the day today. So everything today is nice and dandy. Stay within the expected move. Nice setups outside of the expected move, right? Because that's what we're doing with the 0 DT checklist, is this expected move math of just what's the expected move, right? On these trades, like for today example, it was 44 for today. So if you just place yourself outside the expected move, you have really good odds of winning the trade out of the gate. But what I like to do is also put myself around a nice little zone where I can see my odds out of the money if I was strictly playing off of probabilities. But I'm not. I'm using a lot of support and resistance and a lot of lines, pivot points, right? Just trend lines overall. And that can help you make your decision and your thesis for why you're in the trade. And then I use the EM high and low as like, when should I start to manage, right? Like if we were to break below 39.47, that's the first time I will check my charts. I have alerts set throughout the day, just so I don't have to stare at the market all the time, because I find that my trading's actually gotten better the less effort that I put into it, which is kind of funny, right? Like old Buddhist and Taoist texts always talk about action and non-action, where like there's things in life you have to do, like the gym, for example. You go lift weights for 30 minutes, an hour, whatever. Go to the gym, do your running, all that. But your muscles are built while you're resting. They're not actually built at the gym. So you need like a really good balance of action and non-action to be, I think, a successful trader as well. So that's a perfect mix of why I love credit spreads every single day. And when you can get these really good probabilities, set your play up, and then you don't have to actively scalp and manage. And honestly, I think my performance and the Discord's performance is probably better than the majority of the scalpers and swing traders over the last 6 months, I would say, since we started this little 0 DTE challenge off this criteria. But yeah, that's what we did today. 39.15 area was where we were at, right? That 39.15, 39.10, right at that 2% down mark. And like I said, it's a 2% down day protection, and it's close to 2 times the expected move low. So you already have 2 things that need to happen that have less than a 10% chance. Even 2 times the EM low doesn't get tested very much. I think it's only been done like 6 or 7 times this whole year. So the odds continue to just be in our favor, and then we can manage and de-risk as we need to. But today we didn't need to, right? And that's a super nice thing about the style of trading, is just compounding your winners, right? Because every day you win, you have more money in the account, even if you still size the same every day. And then just catching the losers so that they're not max losses. So that's the one thing I really like about this strategy in general, which is super fun, right? In the last 2 trades, like I said, we had that big gap up the day before. If we go to the 5-day chart. So yeah, that move right around here, able to short that move, bang, 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 nice little EM protection. And this market's pretty choppy up here, which is expected, right? After you have a big move from CPI from 37.50 to 39.50 in a day, this is when you see people get exhausted, right? Even the buyers are going to get exhausted, and the sellers, because the sellers are sick of shorting and getting stopped out. And the buyers are also like, well, if we got in way back here and now we're getting out up here, like this is a pretty dramatic move. We should probably do that. So they're just fighting and fighting around that 4,000 level. And today, again, 39.60. I wouldn't be surprised if today we sold off again like yesterday and then cap up overnight. So we'll check it out. We'll see what the market ends up doing in general, but that's just how I set today's trade up. And that was, I got a comment from one of my last videos that says, how do you pick the direction? I literally go off the expected move more than anything. Like if the market is down in the morning and the reason for it isn't anything too dramatic, right? It's not like crazy insanities going on in this world, right? Like you guys remember how the market would move when like a new COVID strain was found and it would just straight down? Since we don't have news like that coming out anymore, to where a lot of this stuff is like short-lived news, and a lot of stuff happens overnight and before the market opens. So I can take things like just being patient with the setup, waiting for the support zone. And then once we find this zone of support and you see the expected move, like you're falling and falling towards, once you're falling more and more towards like these numbers, like when you're at 39.91 was your previous day's close, and you start falling to where you can get good credit when you have a 90-some% chance, it's more about playing the probabilities than picking the direction. But picking the direction's nice because you can get in and out in like half the trading day, right? You don't have to sit and trade all day. So super beneficial strategy there for it. But that's how I do it. That's how I pick the direction, is I just wait for my supply zones and my resistance seller zones. And once you get to those levels, then you just put a good trade on with your good probabilities. And then you just have to make sure that you're able to manage it properly if it's to get out of hand. But, you know, when these gaps are open, it makes it a lot easier to choose too. Like, hey, we gapped up, there's a good shot we're going to go fill that gap below. So even if today kept running, or yesterday kept running up, well, you already have an open gap down here. So if you just rolled your strikes up, it's eventually going to come down to fill this gap, and then you can close your position. So that's the one thing about this strategy specifically that I'm like a really big fan of, is even if you are wrong right away, very rarely is it like an extremely dramatic thing, as long as the odds are always in your favor. And you can catch those losers when you do break the support, right? Like we could have broken support this morning, although we rarely do even exceed the expected move, right? So like even that alone is rare to do. So that's the thing. You guys just need to take a look at your reason for getting in a trade. And if you don't have a specific criteria, and that's how I'm 83 for 86 now, if you don't have a specific strict criteria of why you're getting into a trade, because entries are honestly more important than exits in the stock market, in my opinion. and that's just my opinion. You guys can say whatever you want about it, but that's my thoughts, especially with how I've been doing this, is it's all comes down to your entry. And you have to make sure that the amount of risk you have on outweighs the reward. Wait, you need to make sure the reward amount that you have on outweighs your risk to where you can handle the loser and it doesn't draw down your entire account because you panicked and let something go to a max loss instead of just eating your stop or rolling it properly. And that's one thing that's very common with most traders is just those short-term emotional decisions can wreck your long-term results. But like I said, I think it's all about the entries. And if you don't have strict criteria, you are literally gambling, and you would have better odds going to the casino than sitting here and trying to pick the direction of the market. Like seriously, your odds are much better playing blackjack all day than they are picking the direction of the market with how volatile this has been. So I did want to go over that really briefly. But yeah, in general, the VIX has still been pretty decently low, still around that 25 mark. Today we had the gap down, but we did not get the gap fill to the upside. The expected move was not exceeded yesterday. We actually still closed within the expected move after being up almost 2 times the expected move. My sizings are the same as always, like 5 to 12,000 in collateral. Trade timing, I've actually been taking more trades in the morning just because the setup has been there, right? We went over choosing the strikes, and I showed you guys how I did that with our expected move chart. Risk management, today was definitely a rolling day. If we broke that EM low, I think I would have rolled the position to the next day down to like 38.70 zone, expiring tomorrow. So at this current moment, if that was to happen, we would have about 80 points into the next day. And I think Vance just posted. Yeah, Vance posted for today. So I'm going to give that a thumbs up. For tomorrow, and for me to get tested there, we'd actually have to go 2 times the expected move low the next day, which has only happened like 6 times this whole year. So if you're able to catch it and roll to that position quickly, then boom. Like even if you have to pay a little bit of a debit, your whole goal is to preserve your capital at that moment. So you just have to be smart and set yourself up for the very next day's issues. So just so that you don't get caught. And that's why I always tell you guys that your entries are important. And then when you roll, it's important to roll to strikes and areas that make the most sense for your trade. So just wanted to say that really quickly. If you guys do want to come join and trade with us in the Discord, the link is below. I do post the trades like every day that I take them. I try to get at least 4-day trades a weekend with everybody. So the link is below. And then I also do mentoring if you guys would like a one-on-one session to go more in depth on this, or just really anything. If there's any strategy you want to learn, shoot an email to me down in the comment section. Either leave a comment or just shoot an email that you see in the description. But that's going to be everything for me in this video. Like I said, the 0D pumping irons have just been going nuts. 83 for 86, and I need to update that because that's what it says here. But 83 for 86 is I just updated these last 2 trades where we got 8% and then 5% return on collateral. So I'm really excited, but that's going to be everything for me in this video. I appreciate all the support, and I will see you guys in the next video.